Today we're going to be taking a look at a company that I've probably talked about more than any other company on my channel, yet I haven't added to the portfolio yet. Now, I'm assuming you've read the title or seen the thumbnail, so you know the company we're going to be taking a look at today is Microsoft. Hey everyone, and thanks for joining me today. My name is Matt, and as always, before we get started here, I just need to say, not advice, don't take it as advice. If you need advice, speak to a financial advisor, but this is just for your entertainment purposes only. Also, I want to say, I'm very quickly starting to run out of stock ideas for my Watch This Wednesday portfolio, so please let me know any stocks you'd like for me to take a look at. I have no problems doing a regular stock review for companies, maybe if they're ones that I'm not as interested in, and then if you give me suggestions for companies like Jumia that I really like, then those are the ones that I do for the Watch This Wednesday. So please let me know some stocks you'd like for me to take a look at in the comment section down below. They might be on Watch This Wednesday, or I'll do just a random video throughout the week talking about the companies that you suggest. Also, still remember, like this video, 5-cent donation for charity, subscribe, 10-cent donation for charity. You know all about that. And one last quick update in case any of you were wondering, I mentioned or I talked about a barbecue competition I was going to be in about 2 weeks ago. I came in third, which I'm very excited about. It was my first competition ever. I made a pork shoulder or pork butt, and we turned in 2 of them, and we went through about 10 pounds of meat in less than 15 minutes. And we also had to turn in cold pork because we started feeding people at 2, but the judging wasn't until 6 o'clock at night. So third place with a cold pork butt, my first competition, was something I was very excited about. Anyway, back to what we came here for, Microsoft. So Microsoft, again, a company that really needs no explanation. I'm sure everyone out there has heard of Microsoft. Some of you probably have Microsoft products. And if you've been watching my channel for a while, you know that I'm a huge Apple fan. But I don't let my thoughts on products and services get in the way of me understanding that Microsoft is a great company and it can be a great investment to have inside of your portfolio. And I'll say, similarly to Apple, Microsoft is a company that I could bet basically everything I have in the fact that I believe this company will be around and prevalent within 50 plus years from now. So it's really a company I don't see going anywhere anytime soon. And part of that does have to do with the way they've been able to grow their business. Sure, they started off, they had, I think it was called like Altair Basic or something, and then eventually they started to roll out like Microsoft and all of their programs. But since then, they've expanded into many other different offerings to really help this company grow, as well as been able to create both one-time payments and reoccurring sources of revenue, which is something I absolutely love to see. But enough about that, let's go ahead and take a look at the numbers here. Now, for the numbers this week, I'm going to do a comparison with Apple. Now, with Microsoft, I really feel like we can compare them to so many more companies than just Apple. We can compare them to Salesforce, to DocuSign, to Oracle, to you name it. There's a bunch of companies that Microsoft does compete with. That said, I don't think we can compare Apple to another company without including Microsoft in that conversation. So that's why I'm doing a comparison this week just between Microsoft and Apple. And I was actually pretty surprised to see the difference here in their numbers. So let me get that pulled up and we'll run through these numbers real quick. So with the PE ratios, kind of I guess what we can expect when it comes to these tech companies. It's very rare to find a tech company that has a lower PE ratio than 25 or so these days. But Apple still has a slightly more favorable PE ratio, in my opinion, being at 28.74 to 33.77. But, there's companies out there with PE ratios at almost 1,000. So both of these are fairly attractive PE ratios given the current times. I was surprised to see this difference here, though, in the beta. We have Microsoft at 0.79 being a little less volatile than what the market provides, where Apple at 1.22 is slightly more volatile than what the market generally is. So that was something I was a little surprised about. I thought these would almost be the exact same number or pretty close to it, but having that give or take 0.5 difference on a beta is fairly significant in this situation. I was also surprised to see the difference in revenue growth year over year. Now, Apple has been doing a great job of expanding their product line, and then they've also been getting into those more subscription service-based offerings with like Apple One, Apple TV, or the Apple Game Arcade, I forget exactly what they call it. And Microsoft has already been doing that, though, with their services from their cloud computing or from Teams. But when it comes to revenue, that's something that Microsoft has been doing very well for a long time. Now, I get that that growth does eventually slow down, but given how many different avenues that Microsoft has for them to be able to grow their revenue, I was surprised to see that Apple was outpacing them by a little bit. Now, when it comes to this ROE here, remember, not all the time is having such a huge ROE a great thing to see. In the case with Apple, I think it's okay and we could justify having that higher return on equity, but it's almost double what Microsoft has going on. We have 44.99% compared to 103.40%. So that's a pretty significant difference. Again, both of these companies are big. Apple can justify the high ROE. I am surprised to see it's that high, but it's nothing really that I would take into too much consideration with an investment like this, but that difference was just so significant, I felt the need to point it out. And we have another huge difference here when it comes to the quick ratio. Microsoft has the 2.10 compared to Apple's 0.97. Now, as I've said many times before, I do like to see those quick ratios above 1. But when it comes, again, to a company like Apple, who has such a well-established brand name recognition, I'm sure great credit history, then that quick ratio being just slightly less than 1 isn't something of concern. But when I see Microsoft's being at 2.10, that absolutely gets the gold star from me, because it's something that's encouraging for me to see and does give me a little bit of safety knowing that this company does have a good amount of cash on hand to cover themselves if they needed like any debts paid back or anything along those lines. Also, I just realized I'm not doing this video because of the news about the Bill Gates getting a divorce from Melinda. It has nothing to do with it. I guess it's just kind of the irony of the timing. Full disclosure, the company I was going to do was Ball, but I don't know enough about their aerospace sector. Ball, the mason jar aluminum can company thing, you know what I'm talking about. They apparently have an aerospace sector, and I just don't know enough about that to really make a video on it quite yet, so stay tuned for Ball as well. But when it comes to Microsoft, there's a lot that I really like about this company, especially when it comes from an investment standpoint. Again, as an Apple person, I can't say I love their computers or anything, but as an investment, I think that this company is fantastic. And part of the reason why I like this company so much does have to do with their CEO, Satya Nadella. I think he's a fantastic CEO. I think he's done fantastic things with Microsoft and has really helped this company stay on track. It seemed like for a while there, Microsoft was kind of, I don't want to say phasing out, but being stagnant, and they weren't growing at really the rate that they could have been. But nowadays, I think Microsoft has done a great job of really being a prevalent company and has just provided a need for some things that we need, like their teams or their business solutions, especially now that many of these have gone virtual. And I think that's another reason why I really like this company, especially from an investment standpoint, because this company has found a way to have their products or services be needed both at an enterprise or business level and at the consumer level. And both of those have the options to have a one-time payment or the reoccurring source of revenue, which, as I'll say for the millionth time, I absolutely love to see that. But where do we start with them? Because they have so many different products or services. They have Microsoft Office, they have Teams, I think they still own Skype, they have LinkedIn, they have Xbox, then from Xbox you have like Xbox Game Pass and buying games directly from those stores. And the list really does just go on and on. We didn't even touch on Azure, their cloud computing. So this is one of those companies that I really feel comfortable personally, because this is not advice, just buying at almost any price and just putting it in my portfolio and letting it go for the long haul, whether that be 5, 10, 20 years, because I really don't see this company going anywhere. And it's again the same argument I had for Apple. Both of these companies will be around for a very long time. So it's hard to try to wait out for a better price point if it's something that you do plan on holding for the next 5, 10, again, 20 years or so. So with that said, I did add this one to my portfolio, and full disclosure, I did also buy Apple this week, or I added some additional shares, mostly because the Watch This Wednesday portfolio got reset, so we didn't have Apple in there anymore. And also, Apple was trading down a little bit earlier this week. They made it to like 127 a share. I think we got it at 129, which was a good price point for me. I was really looking to get it at anywhere below 130 if I wanted to buy more. So once I saw that opportunity, I took advantage of it. Anyway, enough talking from me. Let me get the portfolio pulled up so we can run through these numbers. All right, so portfolio turning down today, kind of expected given the way that the market's been going. But I guess nothing too terrible. Let's see here. So Apple so far, I bought 40 shares, average price of $129.30. A little higher than the 127, but again, less than 130, so I'm okay with that price point for an entry. That one's up $14. I forget if I said that already. Microsoft. I bought 25 shares of Microsoft, again, because I try to weight these at around $5,000 in total market value investment. So that's why it's about 15 shares less than what I did with Apple. So it's down about $8.50. Our average price was $248.68, and it looks like it last clocked in at $248.34. So down a little less than 30 cents a share from when I purchased it. Nothing I'm going to sweat over because, again, there are dividends coming up if that's something you're interested in, so that can easily make up the 30 cents for us. As well as it's just a company that I really do see going to, 300 and beyond, but it's one that I'm just here for the long run. I don't really have an exit point that I want to get out with Microsoft, just because I think it's going to be a good supplement to the other investments we have here. Taking a look at a few of these others, Coinbase down $158, not really a surprise there. Tesla down $360. That one's the roller coaster of the century. So, I mean, that's one of those I wish I could just almost hide it from the portfolio, so I don't have to look at it and start getting those impulse reactions of, should I sell, should I not sell? Because it is what it is. Blackstone, though, absolutely killing it, up $724. So it's gone up about, I guess that adds up. We bought it at $78.49. It's at $88.16. It's almost a $10 gain per share, 75 shares. So, wow. I really did think that was going to be more of like a slow and steady stock, but one, again, is more of an anchor in the portfolio. But it's doing very well, so I'm not complaining over here. And same thing with VOO, Vanguard's fun. $237.25. As I'll say probably every week with this one. It's one of those that I just have it in the portfolio, but it doesn't mean that it's going to be the best performer. It's more or less there so that way we get diversification and I can use it to offset some of the more risky investments like Tesla or Coinbase that I have in this portfolio by using a broad-based low-cost index fund. Lastly, I guess we have Jumia down almost $500. That one's going to be an incredibly risky investment as well, but it could have huge upside if it pays off. So that's one I'm just kind of watching from the sidelines and seeing what all it does for us. And lastly, Square up $9. I can get a Happy Meal with those gains, so if that works out for me. Anyway, that's my review of Microsoft today. I know a little bit different of a video, probably not as in detail as I usually go. Admittedly, a little bit busy of a day, so I just want to make sure I at least got a video because I did skip last week. And like I said, I'm starting to run out of stock ideas, so please let me know some stocks you'd like for me to take a look at. If you want me to make more like real estate related content, since that's what my business is around and there has been a few changes in tax plans, let me know about that. I'll gladly make a video to help you understand those changes and how me from a real estate investor or real estate person standpoint feels about it. Just let me know and I'll gladly make a video about that as well. Anyway, that's really all I have to say here. So remember, like this video, subscribe, 5-cent donation, 10-cent donation, you know the drill with that. All right, I'm done here, so thank you so much for taking the time out of your day to watch this. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and I'll see you next time.